everyone, welcome back to our channel. Today I am diving into the latest comments from Federal Reserve Chair Jerome Powell and what they could mean for the US economic jobs and your money. So Jerome Powell recently said that the sharp shutdown in job growth is becoming a growing risk for the American economy. This is a big statement because when the Fed chair talks about risk, it usually means action is coming. Powell hinted that the Federal Reserve might cut interest rates two more times this year to help support growth and avoid a deeper slowdown. Now, even though the US government shutdown has delayed some official economic reports, Powell mentioned that overall outlook for jobs and inflation has not changed much since the Fed's meeting in September. That's the same meeting when the Fed made its first interest rate cut of the year. At that time, officials said they expected two more cuts in 2025 and possibly one more into 2026. But with the job market losing momentum faster than expected, those rates cut could come sooner rather than later. Powell has also explained that the Fed's focus is shifting slightly from fighting inflation to protecting jobs. He said the job market now faces more downside risk when he's changing how the Fed balances its two main goals. Maximum employment and price stability. Right now, tariffs have pushed inflation a little higher, up to 2.9%, but Powell said that apart from the effect of tariffs, there are not any big inflation pressures in the economy. In simple terms, prices are still higher than the Fed would like, but they are not rising out of control. He also spent a good part of his speech defending the Fed's action during 2020 and 2021, when it bought large amounts of treasury bonds and mortgage-backed securities. They most were designed to lower long-term interest rate and keep the financial system stable during the pandemic. Powell said those decisions were necessary to prevent the treasury market from collapsing. Without those emergency actions, bond yield could have skyrocketed, making it much harder and more expensive for business and households to borrow money. However, not everyone agreed with Powell. Treasury Secretary Bessent and some critics from the Trump administration have said those bond buying programs created distortions in the market and fueled inflation. Powell, however, strongly defended the move, saying it was essential for protecting the economy during an unprecedented crisis. So, what does all this mean for ordinary Americans? If the Fed really does cut interest rates again this year, borrowing could become cheaper. That means lower mortgage rates, easier car loans, and potential a boost for the stock market. But on the flip side, it could also mean lower saving rates for people keeping money in the bank. In short, the Federal Reserve is walking a very fine line, trying to support jobs growth without letting inflation rise too high again. And very what Powell says can move the market, so investors are paying close attention to high signal. We will have to wait and see how the data looks. Things clear, the Fed is ready to act if the job market keeps cooling off. Thanks for watching. If you find this video helpful, make sure to like, share and subscribe for more easy to understand updates on global economics and finance. So see you in the next one. Thanks.